Good day, guys. My name is Leroy Phillips, Senior Technical Analyst with the Unit of Prosperity and Trading Coach. And today I'm going to basically break down the Euro US dollar pair from the monthly time frame. This way you guys can understand exactly what to expect from this pair. Okay, so I have some drawings on here because I've done some previous analysis on it, so I'm just going to start off from where I left off. Okay, so I use something called market phases. That's where I identify the phase the market is trading in before I get started with the instrument. Okay, and thus far I can identify that this one is possibly trading in an impulsive corrective phase. Okay, no need to get into that. If you need to really understand all of that, then you can always join me at the Unit of Prosperity. Okay, so basically we have a three-wave move down here. We have it here. Let me just put this as an arrow. All right, great. So you can see this is 1, 2, 3. I have this labeled as WXY. Okay, so this is a corrective move to the downside. It's impulsive corrective to the downside. Okay, and we got price reversing to the upside here. Now, it's possible that this is 1, 2, 3, 4, and 5, or this could just be 1, 2, 3. Okay, another three-wave move to the upside. All right, so here we're getting a correction. We can clearly see this is 1, and then we have 1, 2, 3, 4, 5 here, which makes this a triangle, or you could look at it as a diagonal. Okay, so this is a triangle or a diagonal, and this is within the BC wave of this ABCD correction. Okay, AB equals CD. All right, so this is our BC wave here, which is a triangle. You can see the triangle here, and the move completes at this area. We got 1, 2, 3, which is a correction for more downside. That downside was cut short, so we can look at this as potentially an X wave. Okay, so this X wave is what starts the move to the upside. All right, what we're expecting from the upside, we're expecting this wave here, this entire wave here. From this point to this point, I have it forecasted. I have it forecasted here. This is something I call market geometry. And if you need to learn more about that, you can join me at the Unit of Prosperity as well. Okay, so this is potentially what I'm expecting from Euro US dollar. Okay, now let's break it down to the weekly time frame. Let me just bring this up. Okay, so on the weekly time frame, we can clearly see this is 1, 2, 3, 4, and 5. Okay, so this is an impulsive move to the upside. So after the impulse to the upside, we're expecting a correction. We have 1, 2, 3, 4, and 5 as part of the correction. So if we have this as 5 waves, we're expecting a 3-wave correction and another 5 waves to the downside, or it could come in 3 waves, but we'll be looking at getting another measured move. Okay, so we'll expect something like this to come back over here after this 3-wave corrective move completes itself. All right, now let's break this down a little further. Let's go to the daily time frame. All right, so on the daily time frame, we can clearly see that we had a triangle here. This was our wave 4, and we had this is our first wave. We have 1, 2, 3, a 3-wave correction here, and we have 1, 2, 3, 4, and 5. Okay, so this entire move down here is 5 waves. Entire move from here to here is 5 waves, and we're expecting that correction. All right, so let's break it down some more. Let's go to the 4-hour. Okay, so on the 4-hour, we can look at this and we can see this is 1, 2, 3, 4, and 5. That completed our 5th wave. All right, so now we're moving up. So in order for us to get into this piece here, let's go to the 1-hour time frame. Okay, so on the 1-hour time frame, let's start labeling. On the 1-hour time frame, I'll look at this here as wave 1, 2, 3, 4, and wave 5. Okay, so that's our first impulse. After our first impulse, we're going to expect a 3-wave correction. Okay, so I look at this as 1. This is 1, 2, 3. That's our 3-wave here, and this is our 3rd wave. Okay, so this is 1, 2, and 3. This is a flat pattern. Okay, so we have wave 1 and we have wave 2. Now we're looking for our 3rd wave. According to the Elliott wave theory, the 3rd wave is the longest wave in comparison to wave 1 and wave 5. Okay, it must never be the shortest between the 3. Now, I'm going to look at this wave 3 this way. Okay, so we have 1, 2, 3, 4, and I'll look at this as 5. Oops, my drawing tool just messed up a bit. Okay, let me just take this off. Alright, so this is 1, this is 2, this is 3, this is 4, and this is our 5th wave. Okay, so if this is 1, this is 2, this is 3, then we're expecting a correction for wave 4. Okay, so what we're getting now is a start of the correction. We do have some news coming out at 2 o'clock. That's the FOMC minutes. So that we will have to let that pass, see what develops here. But before I look to get back on the long side, I will be looking forward to seeing a 3-wave correction. Okay, so I will be looking forward to seeing a 3-wave correction. As to how big that 3-wave correction will be, we don't know. Okay, now what I'm going to do here is I'm going to draw a trend line to trend this impulse. Okay, and let me see here. I'll trend it. I won't put the wick in. Now, I won't put the wick in because I don't typically draw trend lines. I already have all of my trend lines. I use a technique that I developed called fractal trends, or you can basically look at them as a pattern. Now I use them to determine what trend the price is moving in, as in what fractal is holding the price in the wave that it's in. Okay, so until this wave is broken, I'm going to be looking at this trend line as what is going to be holding price up. Okay, great. So this trend line should be propping price up. So we'll watch and see. So after 5 waves, that is the only time that I would expect that this trend line can break. Okay, because it could break in the correction. When it starts to correct, it could break at that point. So before 5 waves, I'm not going to expect it to break. Okay, so we have 1, we have 2, we have 3, and 4 could come back to the trend line and bounce off it. Okay, so we'll see how this wave 4 develops. Now, this 5 waves here could just be the start of wave 3. It could just be wave 1 of 5 for wave 3. Okay, so we'll have to monitor this one, see how it goes. We know for sure we should be getting at least 3 waves up, getting some sort of pattern like a ABCD or WXY to the upside. But since we're looking like we're making 5 waves, then we should be looking for something more like a ABC or a AB equals CD pattern. Okay, to the upside. So correction, buy. Alright, so I'm going to buy the next correction because I'm not sure if we're going to get another big wave for wave 3 of wave 3. Okay, so this is the start of wave 3. So So we could get another correction, making this 1, and the correction becoming 2, and we get another wave 3 to the upside. So that's wave 3 within wave 3. Okay? So it could be as long as this one or longer than this one. Okay? And if this wave 3 is complete, then after our next correction, our wave 5 will be somewhat like this. It should be about this length. Okay? If not, it will be a truncation. But we'll monitor it to see how it goes. All right? So we're expecting a correction here for more upside. And let me just see if I can draw in a correction here. We're expecting something, I'll say something like this, and then we go to the upside. Okay? And if you want, you can also put your fibs on. I don't typically use Fibonacci this way, but I'll just draw it in for you just so you can see, have an idea of what I'm talking about. Just draw that in. So start here and make sure I get it clear. End it here. So we can look at the 382 as potentially being our first target. And we could also look at, if this continues progressing to the upside, we can possibly watch maybe the 50 or 618 area. Okay? And we're generally going to be expecting this to be in 3 waves. So at some point, it has to give a bigger correction, then give another impulse like this to the upside. Okay? So we'll see how that goes. We'll see how it progresses. But we know that it's typically taught to look at the 382, 50, 618 area for the next move to the downside. Okay, so we'll watch it. We'll see how it goes. But I'm a wave trader. I basically just count waves. Okay, I trade the waves as they develop. I don't necessarily trade Fibonacci unless I'm using harmonic patterns. Okay, let me just spread this out for you again. So if this is, let's see here, I'm going to try using some market geometry on this. I'm going to measure this wave. Let's say this correction comes somewhere here. All right, it could give us, this could be 1, 2, 3, making this our third wave. Then we get a correction below here, making this our fourth wave. And then this fifth wave could come somewhere around here, taking us about the 50. So around the 50 area should complete this wave if it's going to be 5 waves. And then this will complete wave 3, and then we get another correction, and then we get wave 5 completing itself, which more than likely will not be a big wave because we can see wave 5 is very short. So the wave 4 correction should come something like this, and then wave 5 will be short. So it should end below 50. Okay, so 50 is a nice area to set your first profit targets after you get this correction. If you're out of the trade and you're looking to get back into it, or if you're holding on to the trade, the 50 Fibonacci level looks like a likely area where a price could end if this is going to be going up in a 5-wave cycle. Okay, at this area we look for a bigger correction to buy it again to complete our third wave. Okay, all right, so let me just put this back in place. Okay, so I'll leave you guys with this one. What we're looking for is a 3-wave correction for us to start looking for longs again. This trend line is a trend line that you could use. This is one of my fractal trends. They prove to be very reliable, and this is an area where you can expect a bounce. Okay, and when I say area, I mean off the fractal trend once this correction gets big. Okay, but we all know that 3 waves make a full correction, so whether or not it comes back here, it's not going to be a problem. You look for a 3-wave correction before you look to go long. No longs before a 3-wave correction. Okay, yes, we are expecting news, but sometimes the news will come out and the price will not move. Okay, or at least not move as aggressive as we would like. So I would wait for my 3-wave correction before I get involved in a trade. I will not trade the news. I don't trade the news. I look at the news as something that creates volume in the market. Okay, so it creates volume, and the volume could go in either directions. It does not determine direction for me. What determines direction for me is the wave theory. Okay, so I'll leave you guys with this one. Thank you so much. I'll keep you guys posted, and remember to like and subscribe. Okay, this is a new channel and I'm looking to build up my subscribers, so like and subscribe so that I can bring you guys some more technical analysis. Sorry, I'm getting tongue twisted. Okay, so I'll keep you guys posted. Thank you so much for your time. It's been a pleasure. Bye bye for now.